Good morning, traders. It is Tuesday, August 26, 2014. It's 8 a.m. Chicago time. Derivatives trading involves substantial risk of loss and is not suitable for all investors. My personal opinions, market data, and recommendations are subject to change without notice. Past performance is not indicative of future results. Overnight news: Japan is to cut its GDP slightly for the fiscal year in October, maintains inflation projections, says downside risks are caused by prolonged sales tax effect in overseas economies. Russian troops have been detained by Ukrainians. They claim they accidentally wandered into Ukrainian territory. Ukrainians are saying that these soldiers were sent in on a special mission and were caught. Ukraine's Poroshenko dissolves the Ukrainian parliament, calls for new election on October 26th. The Bank of England's broadband says wage growth is much higher than expected, is much weaker than expected. Outlook for wages is uncertain. And then the market continues to speculate over an ECB QE program pushing fixed income to new highs and yields to new lows. Be on the lookout, in my opinion, with that being the case, and we're seeing that in the Bund and so on, Spanish and Italian treasuries. With that being the case, if the ECB does not conform with the market's expectations, expect a very big surprise there. U.S. durable goods orders came in at 22.6% month on month, plus 22.6% versus 8.0%. The market actually sold off on that. Not sure why, but it did. And then we should have had Case-Shiller. Let me see. Case-Shiller should have happened just now. Case-Shiller housing a composite came in at 8.1% versus 8.3%, so pretty much in line. U.S. Red Book came in at 0.5%. Previous is 0.5%. Okay. As far as what's coming, what's ahead, at 9 a.m. Central, 10 Eastern, consumer confidence index is expected at 89.0%. Richmond Fed at 8.0. At 10:30 Central, 4-week bills for $50 billion are up for auction, and then at noon Central, a new 2-year note auction for $29 billion. Let's look at the market action as we always do. Again, you notice that the process I'm following is very consistent and repetitive every day. You pretty much can get the hang of it at this point. All right, so looking at yesterday's action, let's zoom out a bit and look at what we've done here over the last few days. This is a 15-minute day session only. Basically, since the point where we hit the 1899.75, basically the 1900 figure by a tick. Remember, we have a gap zone underneath it from about 1897 to 1892 or so. Could not get down there. 1899.75, found buyers, and ever since then it has been on a strong tear. It has tested, reacted to, but has really not traded much in our key areas on the way up from the July composite. Market's just pricing in strong growth still in earnings and in the stocks underlying these products. So overall, the market has been making higher gaps. So you could see that the last time we had a higher gap that closed was way back here on the 15th, and then the next day we had a higher gap that didn't close. After that, a higher gap that didn't close, and then we had some murky days here, and then yesterday we went ahead and put in another higher gap, OAOR, open auction out of range, with the inability to close the gap zone and the gap close. So the market's very, very strong, as we have as I've been talking about for the last couple of weeks. It's just not taking a time to test and retest and build a base from which to launch. It's just taking off immediately every time. So yesterday, in looking at what we did, Here's yesterday's trigger chart. Let's switch to a Renko just to eliminate some of this noise. 2-tick Renko. There we go. So the 2-tick Renko, you can see that there was not that much action. Very tight chart compared to the prior day. See the prior day here for the whole session from 8:30 Central till 3:15. That is the day session. You can see that this chart is approximately twice the size of yesterday's chart for the same duration. So this is why I like Renkos. They eliminate a lot of the noise. If there's not movement, there aren't bars going through. If you look at yesterday's volume, 704,000 traded on the day session. Pretty poor. The day before that, 926. And then Thursday of last week, 670,000 contracts, also a very tight day. So it's just a very very quiet, very orchestrated trading. Let's back up and walk through yesterday. So we open up at 95.50. Remember that price, 95.50. And we test down to 93.25 to put in the opening swing low here, this dashed blue line. We always want to keep track of the initial buyer, the initial aggressive buyer and aggressive seller of the session. And then we use the opening swing as a measuring stick for the rest of the session. The opening swing can be subjective in nature. So we put in an opening swing high at 97.75. It takes almost a half hour to get a proper opening swing. It just took forever to actually move high enough to entice sellers to step in, aggressive sellers to step in, as you see here. That's a very, very slow opening swing, which tells us that the higher time frame is not really active in the market. It takes out the opening swing high by a tick, falls back in. So the expectation is a retest of the open, and then a probable retest of the other side, which is 93.25, but it doesn't quite do so. It ends up extending up. The IB is put in right here, and it breaks the initial balance high and puts in a range extension to 99.75. Here's the 99.75, pull back to the IB high, another high at 99.75, and the market fails to continue to 2,000. Here's the 2K price. And then on the second failure, we have a nice little zipper formation here, and it breaks lower for basically what is the best swing of the day. There it is, 6 points, 6 points down basically, and very, very clean drop. It looked like it was done with the 2000. This is very common. If you go back and look at 1500 or 1000, you'll see this behavior is fairly common. Finally, get some range extension on the downside on the IB low, puts in a neutral day, and now the market's essentially undecided. Buyers step in on this range extension down. It's not able to get back into the 91.25 to close the gap zone, and for the rest of the afternoon it's just sideways. There's really no opportunity here. Same with the NQ. On the NQ, I'm using a 4-tick Renko, and you could see that yesterday was a shorter, fewer bars than the day before, and same sort of a process, except the NQ had much better structure. Once it failed to push higher and broke through the range extension down, broke through and made the range extension down, it did what it was expected to do, which is to test the prior day's range high right here to 60.50 for a 4-point bounce, 3.5-point bounce, and unable to get back towards the mid, unable to get back towards the IB, so it pushes even deeper and misses the gap close by a tick. This is a normal behavior. This is the expected behavior. And then once it's unable to do that, it rotates up to the mid towards the IB, and then pulls back again, and here's a corrective. So this is an impulsive wave, this is a continuation wave, this is a corrective wave. and it's incomplete by the time the market's done, so we expect it to continue higher and push back up towards the 4075 area, or yeah, 4075 area, this high volume node here, through the LVN. So in short, the NQ again providing a much cleaner trade, in my opinion. I think trading the ES is definitely more difficult than trading the NQ, to be honest with you. So been telling stage 5 traders who are struggling to find opportunities with the ES to have a look at the NQ or some other products, depending on their account size and risk control and so forth. So that's what we did yesterday. Overall, the main features is we're unable to close the gap zone below to 91 and a quarter, mostly sideways. And the trade was mostly contained within the opening swing, so it's telling us that the short-term traders were in control. There was no big money committed. There was no higher time frame money committed into yesterday's market based on the structure that was left behind. It's important to note. So the first test was doomed to failure. Poor high at 99.75, unable to touch 2K price. This high remains poor, and so we expect a return to this area, and we expect the 2K price to be taken. Strong rotation down on second test failure to create neutral day. Finished in the middle, market's undecided at this point. Higher VPOC, higher value with higher price action, so the buyers are firmly controlled. The trend continues to be higher. The profile shows a valid value area, and I'm still seeing overall, I'm still seeing weak structures below. Here we are again, leaving another gap zone. Look at these gaps and singles that we have left behind over time here in August. August ends this week. August ends this week, and Labor Day is next Monday. So it seems like we're leaving this this monthly profile behind with this sort of structure in place. Not the best structure, in my opinion, for sustained movement higher. What did I do with? Okay, so overall, a look at a value. Here we've crossed through July, and we've got some sort of an island day yesterday. We'll see how if that actually completes itself. Let's pull this back to where it belongs here. So overall, very blunt profile here for this zone. A lot of areas to test and so forth, with 67.50 being the key price in the area. That's what value looks like. Other than that, I don't have much for the overnight session. Shows again a pretty dead Asian session. Test to 92.25, breaking this weak low that was put in at 92.50. Takes it out by a tick, finds buyers, pushes through to the other side to new highs. Remember the 95.50. Open and point of control yesterday, 95.50, is now the LVN overnight. It is the over/under price for the day. We want to buyers will want to see the market higher, remain higher as it higher than this 95.50 if it's going to continue to push through the 2K price. So we have a clean double distribution here, double distribution profile, and telling us that 95.50, 96 is the price to watch this morning. See what it does with that price as the market trades this morning. Okay. As far as what I'm looking for today, essentially I'm looking for the market to open in value, in range. I don't expect it to escape here before the open in the next 15 minutes. I expect it to have responsive selling back to the 95, 96 area as we just discussed, and I expect buyers to step in to take out the weak high at 99.75 to push to 2001.50, which is our next target up. The first target is 2000.5. The next target up is 2001 and a quarter. These come from right here. So you can see them 2000, the pink line here, 2001 and a quarter. There's some confluence there. I expect a reaction in that area. That's primary expectation. The secondary expectation, I don't know what happened to my 15-minute chart here. Let's see. I might have closed it by mistake, but that's all right. Overall, I'm looking for the secondary idea is that it does try to push 99, breaks through the overnight high, and then falls back in and sits sideways for the session. I don't expect that to play out much. Again, on the news, the Ukraine-Russian meeting today, they're expected to resolve their issues, and that should give the Europeans a pop that helps reduce sanctions on Russia and improves the situation in Europe. U.S. potential action and strike on Syria, on ISIS in Syria, so that's a mess. And then Egypt and the UAE conducted some aerial strikes into Libya over the weekend, 2 strikes in 7 days. So that's getting messier now. Anyway, I'll leave you with that. Thanks so much for joining in. And don't forget to like the video so we can increase the broadband dedicated to this broadcast.